Hello again and welcome back to FATCA CPAs and Consultant. As usual, here we are with our CPA Fulton Abraham Sanchez. Good evening, Fulton, and welcome back to our Tax Talk series.
Thank you, Monica. It's a pleasure.
Thank you. As you may remember, in this video series, we are talking about the different tax strategies that you must follow according to your situation, and we will answer all the questions received through our social networks. In this video, we are talking about FATCA, which was divided into two parts. So now we are ready to continue with the second part. Fulton, shall we start?
Yes.
Okay, here we go. First question of this part. How do I find my FATCA details?
Okay, FATCA details are found in bank statements, your bank statements, if they are, if they have holdings over 50,000, if you are a U.S. citizen or living in the U.S., or $200,000 if you live outside of the U.S., the minimum amount that you have to report and over. Also, you find the details in the report from insurance policies, from stock market accounts, from if you own property in the U.S., and this is residential, if you are living in the property, or if you are renting the property, you will find that information when you do your tax return in the country or here in the U.S. when you report that to the U.S. For holdings of companies, that will be the stocks that you own from the company. That will also be the information of the holding that you have in the company. Remember that FATCA needs to report not only one type of assets as FBAR, that is the banks. You need to report every single asset that you have. So we were saying the bank statements, this could be for cash accounts or for stock market accounts. The holdings of stocks in a private company, companies give you the report of the stocks and the distribution of the dividends every year. That is the document you need to report to the IRS that you hold a 10%, 20%, 15%, whatever is the percentage of the stock that you own in the company needs to be reported if you are a US citizen with holdings in a foreign company. From the insurance company, they give you, in a yearly basis, they give you the cash surrender value of the policy that need to be reported as well. If you have, if you are a beneficiary in a trust, in a foreign trust, and the foreign trust distributes assets, the distribution notice, it will be the document that you need to report that to the IRS. In the case of gold, the valuation, how did you obtain the gold? Did you purchase it? It was an inheritance. If it's an inheritance, it will be the register of the person who gave it to you. If it was a gift, you don't have to pay gift taxes. But the person who gave you, or that gave you the gold as a gift, needs to report to the IRS if it is $100,000. All that is the documentation. All those are the documents that you need to provide information to the IRS. Remember that you need amounts, you need the value to report. So that is the ultimate proof. Is documentation from a third party, that is a bank or a fiduciary or anyone who is not related to you.
All right, thank you. And what does it mean to be exempt from FATCA reporting?
The only way to be exempt from FATCA is if you are a foreign citizen and you have holdings in the US. That's the only way to be exempt from FATCA. There is also another way to be exempt from FATCA if you do not go to the minimum that is required to report to FATCA. If your assets are less than $50,000 and you're living in the US, you do not need to report. You do need to say that you have belongings in a foreign country. For example, if you have bank accounts that are less than $50,000 or less than $10,000, when you file your tax return, you are supposed to say, yes, I hold foreign accounts less than $10,000 and less than $50,000. So it's obvious if they are less than 10,000, obviously they are going to be less than 50,000. So you are exempt there. Also, if you are a U.S. citizen living in the U.S., if you live outside of the U.S., if your belongings of asset, if your holding of asset is if your holding of asset is less than $200,000, you do not need to report to the IRS under FATCA. This is what that means to be exempt from FATCA.
Understood. And why do I need to complete a FATCA Form 8938 statement of specified foreign financial assets?
You need to report that form to provide the detail to the IRS of the assets you hold. That's one. Second, to establish the value of the assets from the moment you receive the asset as an inheritance, or you purchase the asset, or you exchange the asset for any other property. The deal with the form is that it establishes your basis. Because when you are going to sell the asset in the foreign country, you have proof that you have reported your basis to the IRS, and the only amount taxable will be the difference between the base or the original amount that you report to the IRS and the sales price. That's why this form is very important, because you will have the ability to prove to the IRS that you did report the amount when you received the asset, when you purchased the asset, when you inherited the asset, when someone gave the assets to you, and you report that base, and that base will be used for the calculation of the profits for the payment of capital gains.
Understood. And do I have to complete this form every year?
Yes, it's a yearly basis. The objective is to verify that the assets, if the value of the assets are the same through the years, and if the value of the assets increased, that increase of the value of assets is reflected in your tax return.
I see. I see. Do I have to fill in other FATCA form? And also there is another question related to, can you let us know more about FATCA form filling?
The FATCA form, the filling in of the form is directly related to the asset that you hold. That's another thing. And why this form is important. I was saying before that it is important because it establishes basis. It means that the IRS, if you report this form, let's say that you inherit a property, you purchase a property in a foreign country, and the property is valued $100,000, and you live in the US. Am I under FATCA? Yes, because it's over $50,000. I live outside of the US. I am a US expat, and the property is $100,000. Am I under FATCA? No, because the property is under $200,000. So it depends of where I live that I have my obligation to report. But in addition to that, when I am disposing of the asset, the IRS, I can say the IRS, I can tell the IRS, I can say, my property, it was valued 100. I sold it for 150. I'm going to pay taxes only for the $50,000 at 15%. That's why this form is important. It's also important because it's going to raise the variation of your assets. If you sell the asset this year, the one that you purchased 5 years ago, and you do not report it, the IRS is going to find out that you are not reporting the asset that you have because you don't have it anymore, and the system of the IRS is going to check automatically if you have reported a form for the sale of the property. If there is no match between asset not reported anymore, like real estate asset not reported anymore, and no form for the sale of the asset or the property, then immediately it's going to be identify your return, and you're going to receive a letter from the IRS because there is an inconsistency between the reports that you have, the assets that you have reported, and the missing report for the sale of the property.
That's clear. Thank you. And what is the difference between FATCA and CRS?
Oh, I'm sorry. What is that? You said, what is the FATCA withholding? FATCA withholding doesn't apply to US citizens or US residents, either in the US or outside of the US. FATCA withholding applies to foreign citizens investing in the US, for example, in the stock market or in a LLC and a company, a limited liability company that is investing in real estate or in any other sector of the economy. If I am a foreign citizen and you have a company in the USA and your investment is so good, I want to invest and make money. Because I am a US and because I am not a US citizen, I am a foreign citizen. You, as a U.S. business owner, and you are obligated to withhold 35% of whatever amount you pay to me in a quarterly basis. That is FATCA withholding, but it only applies to foreign citizens. If I am a foreign citizen, or the other way around, you are a foreign citizen and I have a company and you want to invest in my company, I have to make you member of my company, a partner, and within a small percentage. You come to my company, I give, and I have to pay you a part of the profits of my company. From those profits that I have to pay you, I have to withhold 35% and give it to the IRS. Then you have to get a tax ID number and get a refund from the IRS. That is FATCA withholding, but it only applies to foreign citizens, not to US citizens. And the percentage is 35% from any amount receivable to that foreign citizen for investment in anything in the US.
Understood. And what is the difference between FATCA and CRS?
Oh, FATCA is only for the USA. And the USA is not part of the Common Report Standard or CRS. Any other country except for the US, North Korea, Iran, Nicaragua, and Gambia, they are not part of the CRS. US has FATCA, North Korea, Iran, Nicaragua, and Gambia, they are neither. They are not member of any CRS convention. The rest of the world, it is. And CRS is something similar to FATCA, but FATCA is with the Internal Revenue Service in the US, in the United States. CRS is a convention for like a multilateral agreement between different countries, but the Department of Revenues of those countries is not involved. This is like government to government.
Okay, that's clear. Thank you. And what is the difference between FBAR and FATCA? Oh,
okay. The difference between FBAR and FATCA is first, the amounts. FBAR, it doesn't matter if you live in the US or outside of the US. $10,000 of FBAR in a bank account, you have to report it, either in the US or not in the US. That is FBAR, only bank accounts, $10,000 and above. FATCA is different. FATCA makes a difference between US citizens living in the US and not living in the US. And between one and the other, the amount changes as well. The minimum amount that I have to report is $50,000 and above if I live in the US. And if I don't live in the US, it's $200,000 and above. That is the basic difference. And that's one. Second, that is the nature of the assets. FBAR is only bank accounts. FATCA is bank accounts and any other assets as well. Anything else, any other asset that the US citizen or US expat owns in a foreign country needs to be reported. Again, remember, this is bank accounts, this is stocks, this is participation in a foreign company, this is distributions from a foreign trust, this is gold that you own, this is valuables that you have in a bank, in a deposit box, in a bank account, time deposits, all kind of assets that have value is for FATCA.
Understood. And also for everybody, please remember that you can look into our playlist, Tax Talk, for knowing more about the FBAR. We are going to leave the link also to for our previous video in the comments, because the last one was about FBAR. Fulton, here we have the last question. What is FATCA self-certification?
FATCA self-certification is the process for the bank. The bank is the one that certifies with the IRS the compliance of FATCA. The banks need to go through a process of obtaining a number of a general number identification for the bank, GNI, with the IRS that is going to be used for the reporting of all these bank accounts and foreign assets that the bank may have. For example, if I have a bank account with a bank in a foreign country and I am a US citizen, even if it is lower than $50,000 or lower $10,000, they are going to report it to the IRS. They don't make a distinction. They report everything. They want to stay in compliance, so they are going to report everything. If I am a US citizen living in a foreign country and I hold a deposit box in a bank, the bank is not going to know what is in the deposit box, but the bank is going to report that I have a deposit box in a bank account. That is how the bank self-certify. The bank self-certify by complying with all the requirements that the IRS has set for the provision of the information about assets, financial assets and non-financial assets from US citizens living out, holding accounts outside of the USA. That is self-certification. It's the completion or the compliance that the bank has to provide, get the number identification with the IRS, and then the reporting of every single record that they have from a US citizen holding accounts in that particular bank.
Thank you, that's clear. So those were the main questions we received. Now we have more information about FATCA than before. So thank you, Fulton, for sharing your knowledge.
Pleasure.
And thank you everybody for joining us in this channel. Remember, we are going to make more videos where we talk about the different tax strategies that you must follow according to your situation. And also you can check on our channel the different topics we have already explained. And in case you have further doubts, please do not hesitate to send us an email or write it down in the comments. For example, thanks to your questions, we decided to make this third video about FATCA. Yeah. So every doubt you may have, please write it down or send an email to the email address you have.
Remember, this form 8938 for FATCA is reportable with your tax return. You have to attach it to your tax return.
Quite important. There are many, many details that you need to be aware of, because if not, IRS won't be nice with you at all. So be sure also to subscribe to our channel so you can be notified when we publish a new video about taxes. Thank you, Fulton, again for your time. And see you everybody in the next video. Bye-bye.
Bye.